Hey, what's up guys? Welcome back to the channel, or welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, turn on that post notification bell so that you're notified when I upload new videos. If you want 6 free stocks, Webull is going to give you 6 free stocks when you open up a new Webull brokerage account. Put at least 1 penny in that account. They're going to give you 6 free stocks valued up to $12,600. So after the video, I want you to go down to the description box of the video. Click on that Webull link, open up your new account today, go get that free stock and go get that free money. Well, guys, on Friday, May 20th, the stock market started moving upward again. We thought, or at least I thought, okay, things are on the up and up. Things are looking good. My portfolio's starting to turn around. And then Monday rolled around, May 23rd. And again, the market was positive. It was making strides. It was moving in an upward direction. I saw my portfolio starting to show a glimmer of hope. I saw light at the end of the tunnel. And then Tuesday, May 24th rolled around, and I woke up, looked at my phone, looked at my portfolio, and it had taken a sharp dive again. And I started wondering what in the world is going on. And so I started doing a little research. And lo and behold, came across an article about Snapchat. It looks as though Snapchat had made a forecast for their second quarter 2022 revenue and profit. And they had to revise those numbers. Snapchat basically was telling the market, we're not going to hit the numbers we said we were going to hit in the second quarter of this year. So what does that have to do with the stock market? What does that have to do with Snapchat breaking the stock market? Well, let me walk you through, at least give you my opinion of what's happening. So Snapchat basically said, hey market, hey investors, this is what we believe we're going to do in the second quarter of this year. They were basically forecasting out their revenue and their profits. So then they came back and said, guys, we're not going to do that. It's going to be lower. We're not going to hit those targets we told you we were going to hit. And that really threw the stock market into a sharp decline, right? Because the Dow, the NASDAQ, and the S&P 500 all took drops as soon as news came that Snapchat was not going to be able to hit the numbers it predicted it would hit for the second quarter of this year. See, Snapchat is a technology company, right? And we know tech has been hit pretty hard in this recession so far, although it's not officially been called a recession. I believe it's a recession, and technology companies have been suffering. And when Snapchat came out with that news that it was not going to hit its numbers, that basically sent a message to investors that we are in a recession. When we got companies like Snapchat, technology companies, social media platform companies saying that they're going to miss their targets. Now, why is Snapchat saying it's going to miss its targets? Well, they blame it on a slowing economy. Just like I said in a few videos ago, guys, when Target, Walmart, Dollar General, Costco, when those guys came out earlier this month with their first quarter 22 numbers not hitting expectations, they were down. Guess what they said? They attributed to the same thing, a slowing economy. Slowing economy means consumers. See, our economy is made up of 70% consumer spending. That's people like you and me going out buying stuff. That's 70% of our economy, right? So when companies say we're not going to hit our targets because of a slowing economy, all they're saying is consumers are not spending as much anymore. And that's basically what Snapchat said. They said, you know something? People are just not buying. So how does Snapchat makes its income? Let's talk about that. Snapchat predominantly makes its income from two sources, from advertising and from e-commerce, right? So as a consumer, I'm watching Snapchat, and then there's an ad that flies by. Oh, I like that. Oh, I like that product. So I click on that ad. See, Snapchat makes money because companies want to advertise on their platform so they can get to people like, you and me, right? They also make money from e-commerce, people buying stuff on their platform, right? People selling stuff on their platform. So those are the two ways, in my opinion, Snapchat makes money. And guess what? When you got a slowing economy and people are spending less, guess what they're not doing? They're not going to swipe up on that ad, or they're not going to purchase that t-shirt on Snapchat or whatever. They're not going to do any of that stuff. Why? Because they are starting to cut back. And the two main reasons consumers are in trouble, at least that's what the article said, that consumers are in trouble. And guess what? I agree with that. But the two main reasons why they're in trouble is inflation and interest rates. See, inflation is about 8.5%. And all that means is the goods and services that we use every day have sharply went up in price. I mean, it's just skyrocketing, right? And the reason they're skyrocketing is because people are spending so much and buying so much. Manufacturers of these goods and services can't keep up with demand. So when you can't keep up with demand and you have an undersupply, the supply you do have, guess what happens to that supply? It goes up in price. And that's what inflation is, right? They just can't make the products and services fast enough in order to keep up with demand. So when you got that over demand and you got that undersupply goes up in price, and that causes inflation. So that's one of the reasons why the consumer's in trouble, is because of inflation. The second one is interest rates. See, what our federal government does, at least through the Federal Reserve, what they do to make inflation come down, they increase interest rates. See, they're pretty smart. They know if they increase interest rates high enough, people are going to stop spending, because people ain't going to be able to afford to borrow money, right? Because the interest rate's too high. So when people are forced to stop spending through high interest rates and their ability to not be able to afford those high interest rate loans, businesses and individuals, businesses and consumers stop spending. And that's really what the Federal Reserve wants to happen. They don't want to completely stop spending, but they want to slow down the pace of spending. That's why they increase interest rates. And typically that will push inflation back down. Because what pushes inflation down? When people stop spending, and then these companies and manufacturers of these products and services, or these goods and services, can then get the right level of supply out there with the right level of demand. They want to equal that out. They want to make that a little bit more smoother. They don't want a high demand, low supply. They really want it to be even. Just the right amount of supply, just the right amount of demand. That will bring down inflation. So that's how Snapchat broke the stock market. It's because when they announced their numbers, or not going to hit their numbers for second quarter this year, their financial numbers, it also made companies like Facebook, Amazon, Alphabet, which is Google, right? Those companies also took a sharp decline in stock price as well. Their stock fell right along with Snapchat. Why? Because they're technology companies as well. They also advertise. They also do e-commerce. See, those are a big part of their revenue streams, especially Facebook, right? Especially Amazon, right? Also Google. See, all of those guys are right there. They're technology companies, but they're all driven by advertising and their advertising revenue and e-commerce revenue. And when people are not spending, guys, what company in their right mind are going to pay Facebook, or they're going to pay Amazon, or they're going to pay Snapchat big dollars to advertise to people who are not spending? Most companies are not going to do that. So they're not going to be spending money on advertising. So these companies' revenues go down. And that's the reason why Snapchat broke the stock market. Is not just because Snapchat, but Snapchat represent these tech companies like Facebook, right? Like Amazon, right? Google. See, it represents that larger tech space. And so investors heard that and was like, well, yep, we're in a recession. Let's pull our money back out. And that's when you saw the three major indices, the S&P, the Dow, and the NASDAQ tumble on Tuesday morning. Well, guys, drop me some comments and what do you think about what's happening? You know, the little rally we had for 2 days and then boom, right back down again. What do you think about that? What do you think about these tech companies like Snapchat, like Facebook, who are having to restate financial numbers because they don't believe they can hit them now? What do you think about that? Drop me some comments and let me know. If you want those 6 free stocks from Webull, click on that link down in the description box right now. Open your Webull account, put 1 penny in there. Go get that free stock, go get that free money. If you're stopping by the channel for the first time, please consider subscribing to my channel. And I want you to smash that like button for me as well. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'm going to catch you on the next video. Peace. Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.